continue taking their toll on mortgage demand. That said, the average rate on the 30-year fixed is sitting at 7.25%, and rates have now been over 7% since late July. That's the longest period that they've held at that level in 22 years. Cash out refis no longer worth it, because to get the cash, you have to trade up to a much higher rate. Applications for mortgage.
See, mortgage rates are always on everybody's mind, but the big question is, when will they drop? Let's dive into it. Mortgage rates play a vital role in our financial decisions. I mean, from what you pay every single month to the total of payments and the interest that you can pay over the life of the loan. A $300,000 mortgage at a 4% rate is $1,432. At a 7% rate, that's $1,996, almost $2,000 a month. That's a $564 a month difference and almost $7,000 a year difference. So interest rates are a big deal. So whether you're a homeowner or a renter, interest rates are very important to the overall economy and real estate market. Okay, so what are the factors that are driving the interest rates right now? First we need to start with the Federal Reserve. So the Federal Reserve's actions in raising and lowering the federal funds rate, it sends ripples throughout the entire economy because it affects everyone's spending and inflation and all those numbers that affect the way bonds are traded, and ultimately bonds are what's going to determine how interest rates are done in the mortgage world. There's also factors like economic indicators like GDP, inflation, and employment report, like those claims for the unemployment claims. All those factors go into what drives the Fed's decision, how the bond traders on for the mortgage-backed securities, and go back to employment. I mean, for instance, a strong jobs number means that increases employment inflation, and then as inflation goes up, rates go up. So again, those economic indicators are very important. Also, global events. For instance, we had COVID in 2020. That was a major event for interest rate. But what about other economic events? I know that we had certain debt crises in Europe, or if there's another global catastrophe, flood, or something happening globally, can affect interest rates, because basically we do what's called a flight to quality, and money from overseas comes to the U.S. because it's seen as a safe haven, and that can alter the bond market, ultimately interest rates. And lastly, the housing market, with its supply and demand dynamics, can push interest rates up or down. Let's talk about today's economic climate in 2023. Ultimately, on paper, we have a pretty strong economy. So, GDP growth is happening. Unemployment is below 4% still, but still, it's a very strong job market. And what the Federal Reserve has been doing is they've been raising the interest rate to kind of tame inflation that was injected into the system after the COVID stimulus bills. Injected all this money almost historically, but basically more money was created in that period after COVID. So ultimately, right now, what the Fed is doing is trying to strangle the system to get that money out of the economy. And the Federal Reserve, they made those decisions in their meetings to keep raising the federal funds rate. And I think it's something they should have done a while ago. It's just they had to get really aggressive in a short amount of time. And what the Fed does has ripple effects for months on end. And as for mortgage rates themselves, here's current interest rates. You can always go to my website, tcmortgage.com, and go to today's rates. But we're just a shade over 7%. So that's kind of where we're at. We've been doing a lot of different programs to mitigate those, like 2-1 buy downs. You can kind of find some information about that on my channel here as well, in order to kind of weather the storm right now of interest rates. Or if you can get seller credits right now. I've always said right now is a good time to buy while everyone's kind of on the sidelines. You have sellers not selling, you have buyers not buying. Maybe it's a good time you can negotiate a deal, kind of ride out this storm until rates come down. So when are rates going to drop? They always say success leaves clues, but also history leaves clues too. And then it's the same with interest rates. For instance, when you look back into the 80s, the biggest things that affect each other are interest rates and inflation. So as inflation comes down, the Fed can lower their federal funds rate, but it doesn't happen right away. So it's not like it's a one-to-one thing. I know in our 21st century economy, we expect things to be now. That's kind of not the way the economy works. So the federal rates are lower their interest rates, and there's a lagging effect. So we definitely expect rates to come down, and the lagging factor, I'd say 18 months to 2 years after that inflation hits rock bottom. So, this is just based off of history. As the inflation comes down, mortgage rates will come down unless there's another extraneous event that's going to precipitate the drop in rates like 2020 happened. Many financial experts and economists have weighed in on their predictions for interest rates. I know I've tried to make my own prediction for interest rates, but again, these guys have a lot more data, a lot more staffs. I just kind of just see what I see here in the seat. But ultimately, here's a few that are out there. For instance, Morningstar came out with this article. I know I did some content on it. They expect rates to hit 5% next year, 2024, then down to 4% in 2025. And that's probably the most aggressive one that I've seen. And there's others like big banks, or the big organizations like Fannie Mae, Mortgage Bankers Association. All these major organizations will make their determination. And you can see that they all generally agree that they're going to come down to one factor or another. As far as how long or how much, it's relatively the same. But you can see basically it is a downward trending graph. So I believe that rates will be into the sixes by the end of this year, and then into the fives, as we go into middle of next year. So again, not awful rates, and historically pretty good. It's not going to be the 2 and 3% rates that we saw, but still much better than the 7+ that we're seeing right now. Okay, so what does that mean for you, a home buyer? You know, might be in the market now, maybe you have to move, and you can't wait for all this good stuff to happen in 2025. So you need to buy right now. So what do? Basically, what you do is you talk to me or another professional that you trust, and you shop around and you figure out what are the possibilities. And I've said it many times where right now is a pretty good environment to get the kind of terms you need to make your interest rate lower. So we're doing a lot of 2-1 buy downs, 3-2-1 buy downs, and that might be a good solution for you if you plan to be in that property for a while. So talk to your good mortgage broker, figure out what is possible on a buy down scenario, understand what it really means. Talk to your real estate agents to see and say, hey, what are the possibilities of getting some seller concessions to get this buy down? So those are some of the tools that we have. So it has a predictability. You can be in the driver's seat with your own mortgage payment and your own costs, which is important. And of course, if you're a current homeowner, interest rates are very important because a drop in rates can create a refinance opportunity to refinance into a lower rate and save some payment. Or if you're looking to sell and buy, it could be an opportunity for you to come into a window low enough where it makes sense. If you have a low rate right now where, a rate into the 4s and 5s is not as bad as a rate in the 7s. So you might be willing to sell your home and then buy something else. So it's definitely a very important time, even for you, if you're not looking to home buy, if you're a seller as well or a current homeowner. So staying informed is really key. Definitely, keep an eye on the news, Federal Reserve rates to see what the Fed does. And you kind of just, check the news for mortgage rates. Of course, you can definitely give me a call. Go to dempseymortgage.com. If you have any questions, subscribe to my newsletter here. That's definitely rolling out pretty soon. You can call it Mortgage Magic, market updates on family fabric. It's pretty cool. But, so that's what I intend for folks who are not actively looking, kind of browse the market and see. At this point in the video, you're probably wondering what other interest rate information we have here on the channel. So you should definitely watch this video right here.